We don't know, but let's ask somebody who does. That is Ed Yardeni. He is the president of Yardeni Research. He is on set. We're glad to have you, Ed.
Thank you very much.
So what? Let's say we don't get a hike or a cut. We get the same level of Fed funds rates all year. What happens to equities?
None and done is where we're at.
None and done.
None and
I
done.
like that.
Yeah, I think that's what we're going to see this year. Look, the economy has been remarkably resilient since the beginning of the decade. I think it's getting stress tested again once more. This time, of course, with this war in the Middle East, with oil prices going up. I think the economy is going to weather the storm. I don't think we're going to go into recession, though I think the risks of that are increasing, but I think the economy will make it through. I think the Fed is between Iran and a hard place.
Yeah.
You know, I don't think they can do anything. They don't know, and by the way, Powell, when he gave his press conference, I guess it was a week ago, he mentioned the words, some combination of "we don't know" about 20 times. So that,
we don't know.
We don't know.
And if you say you know, if anybody out there says they know exactly what's going to happen,
they go to Polymarkets.
Yeah, they should go to Polymarket, and maybe you should ask them where their time machine is, because they've come back from the future. Because I don't know anybody else that knows exactly what's going to happen. And given that environment, Ed, how do we invest?
Well, I think you just stay put. I mean, I think I don't know if it's too late to panic, because people may panic over the weekend depending on how things unfold with Iran. But I would stay put. I don't think you can game this very well.
Is there a point at which we don't stay put because it drags on? And historically, the stock market has not reacted well to energy shocks.
It has not acted well. As a matter of fact, we all remember the 1970s, the stagflationary period. There were two oil shocks back then. It was a dead period, a dead decade for the stock market. So that's not out of the realm of possibilities now that we've got an oil shock. And we had an oil shock at the beginning of the decade back in 2022 when Russia invaded Ukraine.
Yeah.
So we are going to get something that looks like a twin peak inflation situation. But I think the difference is going to be the resilience of the consumer, the economy, capital spending.
I have to say, and I've been doing this long enough to kind of give my sideways opinion. I am a little shocked at how resilient most of the stock market has been.
Really.
Yeah. I mean, I know we're down a couple percent from the highs, but we rallied huge into it. Are you surprised at how resilient we've been?
I'm not surprised with the resilience of the economy so far. It's still to be tested. And therefore, I'm not that surprised by the market, because the other thing that's happening here is apparently industry analysts haven't gotten the memo that there's a war going on and it might cause a recession, because earnings expectations have actually gone up. The analyst expectations for the...
Are those wrong? Is that wrong to do that? Energy, while critical, is the lowest percentage of the GDP input cost that it's been ever in American history.
It's not going to make a big difference. What is making a big difference is that we continue to see that earnings expectations are rising in technology. There's a lot of controversy about technology these days, but the analysts collectively keep raising their estimates for that sector.
But yet there has been a drawdown in the Mag 7, a pretty good drawdown.
Yeah, and it would have been more if it hadn't been for the analysts raising their earnings. In other words, the valuation multiple of the market, overall market, with the Magnificent Seven has gone down from about 22 to 20. It would have been more than that if earnings estimates hadn't been right.
Do you think that drawdown in the Mag 7 is related to the war? I don't see what the connection is, other than maybe nat gas as an input cost to AI.
It's a whole different war in that. It was we talked about it before when I was here, and that's kind of the Game of Thrones. For a long time, there were 7 independent kingdoms surrounded by moats, happy with what they were doing, really weren't competing with each other. AI suddenly created an AI arms race, if you will, and now they're all competing with each other. They're spending a lot of money. So the game has changed. It's still the Game of Thrones, but it's more competitive, let's put it that way.